9:43 de la mañana está con nosotros Christian Reiter, gestor del DWS Floating Rate Notes, que es ahora mismo una de las opciones para aprovechar la subida de los tipos de interés, haciendo inversión que juegue con esa subida y pueda dar rentabilidad con estas floating rate notes. Thanks for having this time with us. Good morning.
Thank you very much. Good morning.
DWS Floating Rate Notes is one of the flagship among short-term fixed income these income funds. Could you briefly explain why floating rates bonds remain an interesting investment opportunity in the current context of rising rates?
Yeah, so we have seen in the recent past we came from a negative interest rate environment, and now it's the time when central banks have to react on the inflation, the elevated inflation that we see everywhere, due to the Ukraine tension, due to Corona, due to second round effects that we see. So therefore, central banks are now on the way to change their view, their monetary policy stance, and are now on the way to increase rates. And we have seen that already in the Fed. We have seen it at the ECB. And they are really convinced to do something here and to bring back the inflation to their normal target, to their medium-term target. In that environment, when rates are rising, typically you should be, or it's an advantage to be short in the duration, in the interest rate duration. And with the floating rate notes, that is exactly the case, because floating rate notes are linked to money market rates. For example, in euro, you take the 1 month Euribor, or you take the 3 months Euribor, and with that, the floating rate notes, every coupon payment, so if you have a 3 month Euribor, it's linked, it's then paid quarterly, on a quarterly basis, and every quarter it is locking in the new interest rate environment, so the new Euribor rate, and that means that you participate on rising rates here, and that will be shown in your coupon, in your interest income, that is increasing without having a long interest rate duration.
The most important thing, I think, is to take these high rates to achieve good benefits.
Yeah.
The main key is these high rates. Because when they finish, the central banks finish the rising rates, this product has less importance for the investor.
In that case, when when the path is at an end, that means you are at a higher interest rate. That means that your income is at a level where it's reflected in the money market rates, which is, for example, 3 months Euribor, and then you will earn that interest in your fund, and then you have to participate also on credit spread movements and the development there. So you have in that fund and where you have an enhanced yield, which is a little bit higher than in the typical money market area, but it's less than if you go in the longer end of the curve, and especially in the interest and credit curve.
I think this short term, 3 months, is one of the other keys for this investor that is looking for now liquidity.
Exactly. That's a key point, because we are close to the money market area, meaning that for us, liquidity also plays a big role in our fund. So we have normally a higher cash or cash equivalent buffer in our portfolio, so to be able to cope with the in and outflows of the fund, and that is very interesting in this environment, because you do not need to sell or to purchase or to react and to shift your allocation in your portfolio very often.
Are this product is an opportunity to refuge against inflation?
From a rate perspective, I wouldn't say a refugee, but I would say that you participate in rising rates because central banks are reacting on the higher inflation, so they need to bring the inflation back to normal levels, and they do that normally with rising rates, and therefore you participate on that.
What's the performance for this product?
We had the performance of the fund since year end is still a little bit negative due to the fact that we had some credit spread widening based on these the environments that we see, geopolitical tensions. We had the Ukraine crisis, and we had the elections in Italy. We had the UK turmoil last couple of days and weeks. That's the reason why we still have to suffer in the fund due to the elevated credit spreads. But from the interest rate perspective, we are increasing, and we still have now a yield of, about 1.8% in our portfolio.
What are the main positions of this fund?
To be honest, I cannot comment on the main positions in our fund, but I can tell you that from a sector perspective, we are investing in financial floaters, we are investing in corporate bond floaters, and we still have also a huge cash position in the portfolio to be liquid, to offer a liquid product to our clients.
Have you made recent changes in your portfolio?
In the recent past, not really. Because now it's the time when you get some more inflows that you have to invest. What we are doing now, we want to keep more or less the current strategy in the portfolio. At the moment, we are more than 50% invested in financial floaters and about, let's say, 1/4 of the portfolio in corporate bonds, corporate floating rate notes, and then we also add some specific floaters where you see some investment opportunities in the market, but this is only in homeopathic sizes.
Christian Reiter, gestor del DWS Floating Rate Notes. Thank you very much for having this time with us. Good day, good business.